What is happening, everyone? Welcome back to the channel. Happy Monday. It has been a few weeks. I do appreciate everyone checking in. I am still alive. I haven't died. Not yet. But in Dubai for a few meetings. Back for my birthday. Spent some time with my family. And we're back at the station, at the desk where the magic happens. So, loads of things happening in the markets. You've got equities, commodities, cryptos all crashing. Dollar continues to rally amidst the current narrative that we have, which is simply every single central bank or majority of the central banks raising interest rates to fight or try and tame inflation, which continues to be a bit of a burden. And there again, their whole goal and main focus right now is demand destruction, which is clearly working. Everything is tanking. It is just a case of where everything bottoms out and where do I think the pivot is going to occur. So stay tuned in the video. We're going to cover everything. I'm going to cover what I'm looking out for this week and more importantly, how to end off Q3 with a bang and start off Q4 next month with a even bigger bang. Let's jump straight into the charts. Right, so the S&P 500 has been something I've personally been taking advantage of over the last couple of weeks, especially around this 4,100 region. I'll drop a screenshot somewhere here of the befores and afters that I shared in our group. And there again, it has been so technically aesthetic and pleasing, the fact that the technicals have been lining up with the fundamentals, right? And if you can't get those two together, trading is probably not for you. Because if you don't understand your fundamentals, your technicals are just a guess. And that's not what you're here to do. So Dow Jones as well has been a beautiful short position. I'm going to reference this again, the Big Short YouTube video that I did. I'll try and put it somewhere here. Great video. Great video. We called the Dow Jones from the 34,000 handle. And there again, the market's been falling ever since. I personally haven't held my position from the high. However, I have been capitalizing on intraday moves to the downside, understanding the narrative. So with that being said, I do still see the Dow continuing its leg lower, more than likely targeting the 28,000 handle on the Dow, which there again, there is still further room to the downside. Another 8% drop within this cycle within the next couple of weeks. With the Federal Reserve raising interest rates this Wednesday, currently expected by 75 basis points, I do expect risk assets to continue to get hit. As it currently stands, every single central bank, as mentioned in the start, are trying to destruct, right? They're trying to destruct demand. They're trying to break it. They're trying to shut it down so people stop spending. So that being said, we may get some sort of correction into key areas of interest, key areas of value on the lower time frame. But for myself, what I am going to be doing is simply shorten the rallies. So first little entry, hopefully this week leading into Wednesday, is a short on the Dow, where I'm looking for another correction into at least 28.8, which will be my first area of interest. But any little push up, any little rally on the Dow, I've said this pretty much the whole year, especially in the groups that I run, that every little risk asset that we have, any correction that we have, you have to short the rallies. We are not in bull market territory. We are in a bear market. We are going to be going into one of the biggest recessions known to man. And I'll say that again. This is going to be one of the biggest and the hardest hitting recessions ever. Things have just gotten too out of hand, right? You have the European economy, which is almost crippling. You got the energy crisis, which is caused because of the sanctions from against Russia. You got the inflation problem that's spiraling out of control. You've just got us coming out of a pandemic where China's still stuck in it. I have a friend in China, in Chengdu, and I spoke to him the other day that they're still experiencing lockdowns. And he hasn't even left his apartment in 2 weeks. So he's stuck in lockdown till now. So that being said, this isn't over. And we are going to see that effect in the markets. That being said, dollar obviously at the forefront of my analysis every single day. We have had this rally last week. Now this rally was simply down to inflation beating expectations. Inflation still coming out higher than expected. the markets were preempting a slight little drop in inflation, which could have possibly been the peak in what the Federal Reserve would have been known to be their hiking cycle, and that would have then caused them to start slowing down. However, obviously with the print coming in at 8.3% in inflation, we've obviously seen the market then pricing that in higher, right? Expecting that higher number from the Federal Reserve. So we are expecting 75 basis points from the Fed. Should they give us more? Dollar's obviously going to continue its rally higher. Where do I see dollar topping out? If I had to choose a number, I would say 112.76. Where do I get that? I get that simply from looking left. Simply from realizing that, 112.70 was a key area of interest in the past. However, with everything that's going on right now, everything's going to go to shit. Everything is going to go to shit. There is nothing that is going to survive this. Will things bounce back? Possibly. It is just a matter of when. But are people patient enough to wait? No. So, that being said, if everything goes to shit, dollar's going to continue going higher. I do see dollar then possibly taking out those 2001 highs. Right? If we have had, let's put this into context. If we've had 40-year high in inflation, we have an unemployment market which is fairly sturdy. We have the central bank in America, the Federal Reserve, raising interest rates more aggressive than they've ever raised in history. Why is dollar not at those highs yet? Is that a lagging concept of the dollar, and are we going to see that continued rally on the dollar? So for myself personally, I see no problem for us taking out these highs on the dollar index, which will take us past 120 on the dollar index. In my opinion, that's going to send the likes of cable to parity. We've already seen Euro USD breaking parity. You look at GBP USD, cable, notoriously known as cable, on the monthly time frame, right? We've had this bearish, massive bearish monthly candle breaking the level of 120. That's a massive psych level. And the fact that we've had that continuation to the downside right now just shows us that we've broken COVID lows, right? And we're heading to these 1985 lows. Those are 35-year levels, right? It's crazy. Crazy. I know. So, you now think about that. If we do go ahead and target parity, what would we need for us to see that? We would need continued inflation in the US. We would need the Federal Reserve to raise interest rates past 5%. We would need the current European energy crisis to affect the UK, which it's more than likely going to. And the list goes on and on. You still have COVID lockdowns in China, which is going to affect global equities in general. That's going to be affecting currencies. It's more than likely going to send dollar higher. So I wouldn't be surprised if over the next 12 months, cable doesn't test parity. Should we be selling these rallies right now? Yes. I wouldn't necessarily be buying the dip. And then we have the Bank of England this Thursday scheduled to raise rates too. However, is it enough? Probably not. So cable for myself, very bearish right now. I'm not necessarily looking to buy these dips. I'm more so looking to sell the rallies. So that's something to look out for. In terms of the yen pairs, the yen pairs are of focus. I've said this before. I'll say it again. I personally have been selling GBP USD the past few months. I'm not buying the dips. I'm selling the rallies. That is simply what you should try to be doing right now, because should we get Bank of Japan intervention, you are going to have your yen pairs trading a lot lower. And there again, I wouldn't really recommend buying these dips at these highs. I'd rather recommend selling the rallies. So for myself, GBP USD currently stuck in a bit of a range. However, I would like to see, given the fact that the Bank of England are going to be raising rates this Thursday, we may see an interim high on the pound across the board, which I'm not too worried about. I'm not looking to buy that. I'm looking to sell those rallies. So for myself, GBP USD this week, GBP JPY, this week, possibly looking at a nice little 40 or 50 pips stop at those highs, and then looking to take this back down to the downside. So that's something I'm looking out for. Should the market revisit 164.50, that is only about 120 pips from where we are, which is nothing for GJ. So should GJ revisit those highs, then I'm personally taking a short on that. So the crypto market, Bitcoin obviously revisiting these lows, which isn't great, right? It isn't great. I'm obviously a big advocate on Twitter. I'll put my Twitter name somewhere here. Go check me out on Twitter. And just looking at Bitcoin overall, we recently had this pump, right? We recently had this pump of around 20%. Everyone's calling a bull market. Everyone's calling the bottom. No, right? No. If we understand the narrative, we understand the market is simply giving us opportunities to liquidate some of our positions, take profit on some of our positions. If you have been buying these dips and you haven't taken some money off the table, you clearly haven't been paying attention, right? If the market presents itself with a 20% rip, got to take some money off the table, right? The same thing with ETH. Ethereum had the merge recently, but it's down 20%, right? When the merge happened, it's down 20%. You can't be buying on the highs. You can't be buying on the rips. These are opportunities to short the rallies. Especially on ETH, there's a beautiful little fib to the downside. Look at that, right? Look at that. Kiss that fib, and we've had that correction. Now, I'm not here to come and preach about the moves that have happened. I'm here to obviously warn you for what is about to happen. Dollar is going to continue its rally higher. Most risk assets are going to continue to get hit. Gold especially as well. One last one on gold. Gold has been sliding over the past few months. Let's get rid of this for some of a second. There we go. Gold has been sliding for the past few months. That level of 1800 was retested there perfectly. And my only concern with this is we are going to head lower. We're definitely going to head a lot lower. We approached 1700. I had loads of messages. Are we buying gold? Is it time to buy gold? Has gold bottomed? No chance, right? There's no chance. If you look at this on the higher time frames, especially on the weekly, right? Price has now broken the all-important 1700 handle. For me, if we get a retest of 1700, that is the perfect selling place. You had your double top. You've had your neckline at 1700. It is the perfect place to short the rallies. Honestly is. So there's something else I'm looking out for. Gold, pound yen, equities to continue lower. Euro, a lot lower. Cable, a lot lower. It is just a case of when. So that's it for me, guys. As long as dollar stays above 110, I am bearish on most assets. Should the Federal Reserve come in with any surprises on Wednesday, I will update you on Wednesday. So stay tuned for that video. Hope you're all well. Please manage your risk. Follow me on Twitter. I'll put my Twitter handle over here. My Instagram's been taken down again. So if there's any fake profiles messaging you, it's not me, right? Hope you're all well. Trade safe, stay safe, and I'll catch you on the next video on Wednesday. Take care. Bye-bye.